Hey, good morning, everybody. Oh, looks like we got a crowd already. Alrighty, I love it. So let's get started. I guess um, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation here, informational, educational, and fun, is not a recommendation to buy or sell anything. If you desire that personal financial advice, hire and consult a financial advisor. And let's jump into some stuff here. So I'll pop up the simple chart. This is the S&P. We broke the downtrend that was 2022. Coming up, tried to get out of this zone where we've tried before. Looks a lot like this. Are we going to break down? I'm not so sure. Like, we may come right back to the bottom of the box again. It's been holding. That's just the simple view. I think we could retrace a little bit and then get another pop right up to this high from August. This zone right up here where we have confluence of several things. So that's kind of the big picture path. All right. Then pulling on down a little bit. I kind of left you with this view yesterday that we'd see sideways unless we broke out or down. Poking down into the close yesterday, closing below that support line. That really makes me think we're going to see this further decline right down at the daily roadmap line. That would be a classic pattern that we would see. So let's talk about where we've been, where we came from, and where we're going. I showed this on February 8th or 9th, this potential pattern for bullish. I gave you the red zone, and we touched it on, that was the 9th. We touched it on the 9th. And yesterday, I was saying there was a potential to go higher, but we ended up crushing that red zone, dipping down. This is the 4-hour chart right here for S&P 500 futures. I just took this snapshot right before we went live. We came down. We almost hit that's basically the roadmap line, that gray, white-ish dashed line right there. On the 4-hour chart, we came down, almost touched it. Coming up a little shy. I think we're going to push down, maybe push on down to this 4,000 area where we might find some support. And we had some weekly pivots and stuff stacked up in that area. And we had a prior low right there, though. So there's a few levels of stuff here. But when we flip up to a daily chart on the S&P 500, this is the regular SPX. Sure does look like it's on the path that I've outlined for a while. All the way back in January, I gave you a path that possibly we would bounce down off the purple line and find support and then rally up through it, or bust up, run out of steam a little higher than this high, and then retrace back, probably retesting the purple trend line, and then pop. That's kind of the path right now. I think we've set up this. If you're familiar with Elliott Wave, it's like a 1-2-1-2. There are some alternate views out there. Very few people are this bullish, but I think that we might go this bullish. And that's why I've got this on my chart. I'm a little bit contrarian to a lot of views out there. But we're going to see this pullback. And it could go as deep as, it can stop at 4,000. I mean, it could stop right up here in this 4,000 area, but it could go as deep as this 39.24 area, right back down to this trend line. Now it could, this can happen faster. I mean, this could hit right back here, kind of hold up in this high 3900s and go. So just be careful, be cautious. Wave 2s tend to go fast. This may be a little slow. You can see this one right here these are a 3-day chart. So 1, 2, 3, 4 candles, top to bottom. We've already had 1, 2, if you count that one, 1, 2, 3. This could come right on down here and bounce. So be careful, watch out for a giant drop. We do have the CPI coming up next week. Now, one thing I want to talk about, let's zoom this chart up so we can actually see it. This is volatility VIX for the S&P 500. Now, I think that we are probably finishing this little move. I think this is accelerated. We probably did this dip here in December. We did this rally, and now we're doing this kind of dip. Well, we did this kind of dip, the drop in VIX. And this was probably in December. This was the drop. We had January just into February. Now we are likely to see a volatility spike. And this could freak people out a little bit, and then we're in for some rally type action. Now, how does that play out on the actual S&P 500 with seasonality? It's right here. We tend to get a little, like this is just January, but I think we're, again, accelerated. So usually we see a little pop, we see a pullback into February, we see a pop again, and we see a pullback in March, and then we start a run in earnest March to May. Now, if we're accelerated, then we're going to get this this little pullback here now in February, and then we'll kick off the run. So be careful, be cautious. This thing can just flip on a dime and get really bullish, and we can see this big move right here that we typically see starting back here and finish up in March, and then we go sideways like the sell in May and go away thing. That's because it gets boring all the way through. You know, we just basically go sideways from May all the way out in July, and we start edging higher a little bit, and then we go kind of flat again in August and chop around in October, and then wrap up the year. So we kind of drift higher from about May through late September or mid-September. And if we're on an accelerated schedule, that means we could drift from about April through like July or something. All right. So just keeping that out there. With the CPI coming up next week, I wanted to talk about this chart really quickly. Now, this is comparing 1966 to 83 in the gray. That's the last time we had a crazy giant inflationary force happening, and the current in red. So we've kind of been bouncing along here. This thing started kind of in 2014. We lined it up with 1966. We kind of went through this, and then we shot up, and this is following a year for year timeline here. Now we could see the CPI drop into 2024 on a kind of an accelerated schedule. It's like a false all clear, and then we could see CPI ramp up. This is inflation ramping up giant once again into the late 2020s, and then down. This kind of fits with that narrative. If you've heard me talking about a longer term, like market freak out, like this is entirely possible. So what does that have to do with the market movers of the day? Well, let's pop over and check some stuff out. I just wanted you to be prepared for that CPI coming out on next Tuesday. S5FI getting a nice pullback. I expect it to come down into this 40-50 area potentially. I mean, that's where it bottomed once, twice. We're going to get 3 times, my lady. I don't know. Oil popping overnight with the Russian news that they're going to cut production by 5%. And that's kind of got a lot of oil stocks down here on the list. ES again, pulling back to the daily roadmap line. That's kind of the bias for the day for me. NQ already almost there, getting a bigger pullback. RTY got a ways to go also. DXY just kind of chopping right there under the trend, under that support resistance line. Could make one more push higher, but it could roll over. So LYFT announcing earnings, getting smacked on the top, losing tons of money, beating on the bottom though, and dropping from 16 down to 11, right back to the lows. And that looks like it's going to go lower low, would be my guess. And it could form a bottom here, but it can very easily stretch down to one more lower low. ASTS making the I grabbed this list off of StockTwits, so it's not necessarily like in order here. Getting a little pop based on some talking, I guess, hype and whatever. Nice little ramp pre-market there. PayPal also announcing earnings, beating on the top, making money, disappointing on the bottom, and so far going sideways. I mean, just sitting in the range of yesterday. Had a little volatility when those numbers came out, but just kind of sitting sideways. And that fits in with the bigger picture that we're stuck on that in that zone where the roadmap line, this is a daily chart, the roadmap line putting resistance for going higher right with this downtrend of highs. It's got to break up through there. Back up through 91 is where I start getting bullish on PayPal. And we've really got this big resistance box, though. We've kind of been stuck in for months and months. But if we can break out of that, we're going to rally up to about 150, 160, right where we drop, you know, that big gap down right there. Right over here. This big gap down, we'll probably go fill that. So up to about a 160, 170 maybe potential on PayPal, which is a huge up from where we're sitting here, right around $80. DWAC making headlines this morning, or at least getting some hype. Don't know why. Looks like garbage. That's the long and the short of that. NWO, whew, that's a big drop. It's not even on earnings, it looks like, so gotten hit. Net, I don't jump around trying to find the news. I just grab the list off StockTwits and then pull it up. Stuff that's moving, stuff that's getting talked about. Looks like Net, Cloudflare, kind of losing a little money on a standardized way, but beating on the top and the bottom just barely. Yeah, cloud infrastructure, it's hot. So their infrastructure can run AI stuff, so they can benefit from the AI revolution also. Google, yesterday, continued to get slammed, and we'll have to look at the day chart. Almost back to back testing that trend line. Similar to what I said on the S&P 500 about back testing the trend line. That's what Google's doing. This may be a buying opportunity right here. Even though it looks pretty horrible. Maybe it's a time to accumulate some exposure to Google for the next pop higher. Especially if it catches up with the rest of the market. Maybe it was overly aggressively punished on this downtrend here. So might be time to think about that. I'm gonna be considering it in the next couple of days. Groupon? No, Global Payments. Excuse me, not Groupon. Global Payments. There wasn't an R in there. Global Payments beating on the top, beating on the bottom, and just getting talked about. Looks like it's not really moving pre-market. Yeah, not really moving. Just that was a nice range yesterday. EXPE getting slammed on earnings. Missed on the top, missed on the bottom. Rough, but it dropped and then came right back up. And now drifting off again, may come back down, retest those lows. So not sure what's up there with the pattern. I mean, that's a large range. I'd watch for continued drop off today. ENB continuing down. By and large, the bias of the morning was down on a lot of things. So AYX, getting a little pop there. Inbridge, they are getting a little pop. So I think that's on the energy. AYX, nice little pop there. Gush. Whew. I haven't seen that one before. It's a 2x bull on oil and gas. It popped all the way up to 144, but getting a pullback. Yesterday, it looks like it was all the way up to 148. So that's a volatile sucker right there. Yeah, look at that. That's some big moves. You can make or break some money right there. I would be cautious. I am still very bearish on oil, even with the Russian news. But lots of this stuff getting a little pop this morning. I would think that was an opportunity to maybe position for more downside. Hate to say it that way, but yeah, even though getting some poppers on oil and gas, they were all on the list there. And then some big downs. This one getting hit in BR. Let's see what we got. Looks like an earnings thing, maybe. Yeah, earnings coming out yesterday. Yeah, wow. Look how much money they lost. $7.60. Oh, whew, $7.87 a share. Wow, that was a lot of money they lost. No idea what they do, but that was a lot of money per share. See how they've been doing. Losing money, losing a lot of money. Golly, how do you lose $22 a share? Oh my goodness, that's like danger stuff right there. Not sure what they do, but or how they stay in business losing that much money. I would watch out on that one. And then ASML also looking like the market just opened. This one also getting a hit. Dropping down from about 680 yesterday down to 650 today. Off the peak at 700. Pretty good pullback. And it's probably, if I had my guess, we're headed back to the roadmap line one more time, just like that did right there. Be another echo of this move right here, right there, which puts us right back to the right back to the roadmap line. All right, that's a big picture of what's moving. Let's keep an eye on the S&P 500. Looks like it's retracing back up to where we closed yesterday. To watch for continuation lower though. It may fill that gap and then drop on down. All right, IWM. My day trade, my 1 day trade. Looks like it doesn't have much of a gap to go. Probably more downside. I would be careful, be cautious if you're trying to chase that one at all. Did bounce right off of that support zone or support resistance box that I've had drawn there. So we could get a little brief reprieve. So yeah, be careful out there. Have a great day, and I'll see you guys later.